Sandra Koschel, your business tour guide. In our last episode, we visited together a business vehicle called a discretionary trust. Let's continue that journey of business vehicles and our last episode today of unit trusts. Now, a unit trust is sort of similar to a company and sort of similar to a trust. So this is a unit trust. Again, like a discretionary trust, it must have a trustee. Generally, if there's a business inside this unit trust, you'd want it to be a company. But unlike a company, it's not taxed, okay? So the unit trust is not taxed, it must do a tax return, but it distributes the profit down to what's called the unit holders. Now the main difference between this type of trust and a discretionary trust that we covered earlier in our last episode is that the entitlements here are fixed. So that means, this unit holder might own 50 units and this one 50 units. So that means every year that profit is distributed fixed percentage, 50-50, according to the unit holding. So just like companies and the shareholding. So what happens here is the unit holders pick up their share of the profit and it goes into their tax return and is treated accordingly. Now this type of structure is most commonly used where two families or two non-related business partners are coming together to do a business together. This is a very common structure for that. So each business partner takes their share and each one deals with their share of their profit totally separate, which is very different to how a company operates. Now the other thing to note is that these unit holders down here, they don't have to be an individual. In fact, they're generally another trust. So, generally, the most common scenario is that each business partner here will hold their units in their own discretionary trust. And so that's a really common way to do it. Now again, here we're usually talking about people, that are non-related doing business together. So very important to get a unit holders agreement drafted by a solicitor. That covers what happens if one unit holder dies or can't work anymore, because generally the other unit holder will want the right to purchase those units rather than just form part of their estate. So that concludes our journey through business vehicles. I hope that's been useful. Please join me in our next episode where we'll be looking at what registrations do I need now that I'm in business. Until then, enjoy your business travels.